Hey everybody, this is Jose Blasco. We are now starting our Before the Bell in 3D week 28. This is July 10, 2023, and it is my pleasure being here, conducting the session for you, guiding you, reviewing the markets together on Monday as we are getting ready for the week ahead. So feel free to interact with me if you are connected live with us. If you're watching this recorded, for sure you can also contact us, email us. But if you're live, there is a chat box, isn't it? Feel free to type, ask questions if you have any, and I will be going over all the materials and happy to also go over your questions. I am highlighting on the bottom part of the screen our financial disclaimer. Please read it carefully. This is important information. Obviously, this session is about the financial markets, and therefore it's all about risk and managing the financial risk and all of those things. So please take a look at that. And also, as we are getting ready to begin with the session today, I also wanted to highlight our newsletter, which is a free newsletter that we publish on Monday morning. So a few hours before we get together live every week, the content is out. And that is, I would say, very convenient for you to have, in the sense that the information I want to cover today in the live session is there. But if you ever miss or need to review, anything related to the content of the session, so you have it on the newsletter, which we produce it on LinkedIn, even though you also receive it on your inbox, on your email. Okay, so feel free to follow the link on the screen or use the QR code if you are interested. So let's begin with the session here. So again, Before the Bell in 3D. This is actually the newsletter I just mentioned. This is week 28, 2023. And we are going to be focusing on 5 key markets: S&P, crude oil, gold, US dollar, and Bakkt Bitcoin. All of these are futures markets. And we're going to be looking at those markets in 3 dimensions, starting with the S&P, which is this one. But instead of looking at it here in a static manner, I will do it using real-time charts. Okay, so here is the S&P. This is S&P futures. This, by the way, I'm using TradingView. Of course, a chart is a chart. You will get the same in no matter the platform. But notice that I am using a collection of tools such as auto UFOs with the green and the red UFOs, auto climate below that tells us more about what's the climate condition. So those are 2 of the dimensions. Okay, the auto climate tells you what is the likely market condition, meaning is it time to be a buyer or a seller, or maybe it's no time to trade at all, long or short, no time to trade. That's the question. Sunny climate, rainy climate, you get my point. So that's the answer given by the tool below, which, by the way, is free and you can find on our site. In case you're interested, take a look. I'll give you another QR code so you can go and check. And on the top, we have the auto UFOs, which are typically used for entries and exits, because wherever you got buy on field orders, the expectation is that when price gets there, buy on field orders kick in, they get filled, and price moves higher. When it gets to the red UFO, you have sell on field orders. Whenever price gets here, sell on field orders kicks in. You got plenty of selling pressure, and therefore the markets go down. So in other words, those anticipated change of directions, those anticipated turning points, are ideal for entries and exits. And you can use auto UFOs by itself, like I just described right now. You can certainly also use it in a way that is combined with other tools. I don't know, maybe you're a Fibonacci trader and you did your fibs from here to here, for example, and next thing you know, you can see how very, very nicely that UFO lines up with that fib, which is cool, where that fib is in the middle of nowhere, is not lining up with anything, where the 50 is also lining up with a UFO. So you have extra odds using the 50 or the 23.6 versus using the other fibs. Just an example of how you can either use the UFOs by themselves, or you can use other tools that you may already use in your trading. And thanks to the UFOs, you can have a double confirmation if you wish, or add a bit more odds in your favor in your trades. Anyway, going back to the market commentary, S&P, what do we have? We have a down climate, my friends. Down climate. So we are set for a down move, even though notice how the size of the dots is thin. It's not like these dots that were thick. They are thin, meaning that there is a directional component, but the climate is not confirmed. In other words, anticipating too much from this climate from a statistical point of view, it's let's call it hopeful. We don't have enough evidence to say this climate is going to last in the direction, and that's why the dots are thin. So, in other words, if you're a directional trader, so an advice could be not to trade or trade with a non-directional or semi-non-directional type of strategies instead of being like aggressively short, right? Even though there is a directional component to the downside, the climate is not confirmed. So it's very important to understand this concept. How does it look like if we look at it on the news flash? So we have that little cloud there. Okay, climate, rainy. Okay, now what about UFO? Okay, well, we got sell on field orders at 44.6625 and buy on field orders at 43.69.5. How does that look like on a price chart? Here we go. 44.6625 is right here. That's the UFO. 43.69.5 is right there. That's that UFO. So this is where the buying and the selling is based on our patented technology. And again, it's relevant information for you to be aware of. Expected moves. That's the third dimension. Okay, the climate, the UFOs, and the volatility. That is the third dimension, volatility. So how do we know the expected move? How do we know the expected size out there in the marketplace? Where we look at options prices. We are looking at options on the S&P index in this particular case, and they have an implied volatility built in. If you're an options trader, you know what that is. If you are not an options trader, bear with me. Options are priced based on some pricing models, and if the price, given a specific condition, if the price is higher or lower, given that specific market condition, so having a higher or lower price basically have a meaning, which is if the price is higher, it means people are buying options expecting a lot from them. If the price is lower, people are selling options expecting very little moves, right? And in other words, we could take those very complex options pricing models, and please allow me to oversimplify this. We can take those very complex options pricing models and reverse engineer them and come up with, okay, if the price of the options are these, it means market participants are expecting 41 points a day, either up or down, on a daily basis, 91 points a week, either up or down, in a weekly basis, or 189 points a month in a monthly basis, either up or down. That's what it means, and that's how we get to that information. We don't look at what is the volatility on the chart, and we expect that to continue the same. We are acting a bit smarter there by looking at what you cannot see on a price chart, but you could see if you were to analyze the options prices, okay, which I'm not showing here, but that is the calculation that we did from behind the scenes. Anyway, so this is the market condition for the S&P, and now I'm gonna run a little bit looking at crude oil and gold and dollar and Bitcoin, because the model is gonna be the same. So let's jump to crude oil. 1, 2, 3 UFOs. Here we go. Here are the UFOs. So what's the climate? First of all, blue thick dot. So up climate, which is confirmed. So the expectation is for crude oil to go higher. We, my friends, have a sunny climate. Now, what else? On-field orders to sell, 74.53. On-field orders to buy, 72.34. How does that look like on the charts? Here we go. Red UFO, 74.53. Green UFO, 72.34. This is where the on-field orders are. You can see a very tight range here. So we may get to see crude oil just changing its climate from blue to red, black to blue. I mean, we can see this price action has been happening here before. And you see what happened. Changes color, go from thick to thin. So lack of decision, right? And why? Because there were on-field orders. Okay, so same market condition right now. So the expectation would be that unless there is a major breakout and then the whole thing changes, crude oil is likely going to behave the way it's behaved within 76.92 and 70.22, which is where the on-field orders are. Speed of movement, volatility expected to be at a rate of 1.60 per day, 3.52 points per week, 7.33 points per month. This is extrapolated, this is extracted out of analyzing the options prices, options on crude oil futures. Market in line, gold futures. Oh, by the way, I noticed that I never removed this QR code from the screen. It was covering some of the content. Sorry about that. Gold futures. So what do we have? We have a sunny climate. Let's take a look at gold on a real-time chart. 1, 2, 3. Here's gold. So we have a blue climate, but careful. It is a thin dot, not confirmed. And even though it's blue, notice that there is a red UFO here, and there is nothing to stop price from all the way to 1828. So if that red UFO, which notice it's creating some effect already into today's trading, gold is down by 0.46% at this moment in time. So if this continuation of the move continues, not only is it going to change the climate, which is likely going to happen, but it's going to go all the way to here, which is a pretty powerful move, okay? Because there is no other buy on field orders anywhere close. So just like on crude oil, we said crude oil is likely going to range. With gold, what's more likely going to happen is actually to have a significant move. And what is the speed of the move that we are anticipating here? At a rate of 14 points a day, 67 points a month, given those on-field orders to sell located at 1936.1, on-field orders to buy located at 1828.7. This is gold, my friends. US dollar, next market in line. The US dollar index, DX futures, loading the chart here. What do we have? We are in a down climate, mirror image of gold, to be honest. We're in a down climate. Thin dot, though, thin dot, so non-confirmed climate, like gold, even though gold was blue, this one is red. And in this particular case, we do have on-field orders to buy closer. So the expectation would be to see a little bit of range action on gold. And these ups and downs on gold in the future days, future weeks, probably will create classical impulses versus corrections on most of the markets. Could be equities, could be energies like crude oil, metals like gold. So we are about to see, I would say, in my mind, what I would call a healthy price action in whichever direction that is based on the climate. But we are about to see healthy price action in those markets as the dollar itself is hitting its own buy and sell on field orders. So those buy and sell on field orders are located at 102.60 for the sell, 101.63 for the buy, and speed of movement expected to be at a rate of 0.42 points a day, 0.93 points a week, 1.94 points per month. And the last market that we're going to analyze is the Bakkt Bitcoin, right here, which in this case we can see it's an up climate. Okay, it's been lasting for a long time though, long time. Statistics suggest that a normal thing to happen is 6. We've been in this climate for 13 bars. So this is a 2 standard deviation duration for the climate. This is unlikely, even though obviously it's possible. Anything is possible in the world of probabilities. An unlikely situation. And unlikely means more likely going to change than not. And we are inside of an area where sell on field orders are available. The sell on field orders are available between 31,000 all the way to 29,000. We are right there. So as we speak, sell on field orders are being filled, and these potentially will push Bitcoin down probably until 27,420, which is where the next buy orders are available, and that will change the climate from blue to red. And when it gets to 27,000, so then probably go back to blue by turning back up around those price points. Speed of movement, little volatility on Bitcoin, less than last week and less than 2 weeks ago. So 885 points a day, a bit less than 2,000 points a week, a little over 4,000 points per month. So less volatility than what we got to see in the prior weeks. Anyway, if you have checked our website before, you will know that everything we do is structured in 3 groups, 3 pillars that support what we do. The apps, technology, patented technology, powerful stuff that gives you an edge. But of course, we need to teach you how to use it. So we have courses, and then we need to demonstrate for you and do live trading sessions so you can practice it yourself. And your knowledge becomes a skill, right? That's what we do, and you can see more of that on our website. Calendar, today, it's a, I would say, average week. At the same time, within being average, we have our consumer price index in the US, of course, New Zealand interest rate statement, same with Canada. So all of these are very relevant. But I will want to point at the CPI numbers because, again, since last year and definitely this year, it's all about inflation, right? So those numbers have the potential to produce great levels of volatility and create great intraday opportunities. Anyway, so as we are concluding the session, quick reminder of our book. We're proud of it. Let me give you a QR code here on the screen so you can grab it easily. Our book has been designated #1 new release in 3 categories in Amazon. That makes us proud. It's a Forex book, but it applies to all asset classes, so don't be confused by its title. It's called Mystery to Mastery series because it reveals how markets work from behind the scenes, if you wish. So you get to understand more of the mechanics of it. It's not like there is a secret sauce or anything like that. I mean, that's many people position themselves like they know something no one knows. It's not the case. Here, we're just going to tell you how things work. That's it, which is a mystery for many. And once you understand, now you can practice that knowledge and it becomes a skill. So now you mastered it, okay, which is the essence of the title for our book. Anyway, pleasure as always to help you to organize yourself at the beginning of the week. Hopefully the session was useful to you guys. Thank you for joining me. It's always my pleasure. If you ever need anything from us, contact me, contact us. You can find us on the website. You can shoot me an email, and happy to help. Let me know if you need anything from us, and if not, I will see you next week. Don't miss Becky tomorrow. Becky will be running a live trading session tomorrow. Don't miss it. You can find the calendar on our website as well. Take a look, join us, and take your trading to the next level, my friends. We're here to help. Bye-bye. Take care, everyone.